Introduction. The class develops what insurance market value means, its consequences, and the implications for fleet management. Insurance market value of a vehicle. What is insurance market value? The insurance market value of a car is used as a reference price for insurance companies and to calculate certain taxes in the event of sale or donation. It also serves as a minimum base price for putting your car up for sale on the second-hand market. The insurance market value of a car is the value it had before the accident. In other words, the price it would fetch if sold. This value depends on the make, model, features, and age of the vehicle, but does not take into account mileage or maintenance. Any extra or tuning elements that have been included and declared in the policy are also taken into account. All vehicles have a specific insurance market value, which generally tends to decrease over the years. The case of Spain is described below, which is the same or similar in most countries. In what situations is insurance market value used? Insurance market value is used in several cases. Total loss car. If the car cannot be repaired, the insurance company will compensate you based on this value. Check your policy carefully to find out what type of market value applies, sale or appraisal. Determine the sale price of your car and add extras if it is in good condition. Taxes. It serves as the basis for calculating certain taxes in the event of sale or donation, such as the property transfer tax. Vehicle theft. If your vehicle is stolen, the insurance company will compensate you according to the insurance market value at the time of the theft. What happens if the insurance market value is lower than the repair cost? In this case, the insurer will consider the vehicle a total loss. The compensation will be the insurance market value or the improved insurance market value if you have previously agreed this with the insurer. Can I claim the insurance market value stipulated by the insurer? Yes, you can ask the insurer to review the insurance market value by providing a private expert report. Check the fine print of your policy to see if the improved insurance market value is covered and your company has not taken it into account. What is the insurance market value of a motorcycle? To find out the insurance market value of a motorcycle, in addition to the depreciation table based on age, which is the same as that used for cars, there is also a table that calculates the insurance market value based on engine size without taking into account the make and model of the motorcycle. How insurance market value is calculated. To calculate insurance market value, insurance companies use the official price of the car. So, you may ask yourself, what is the official insurance value of a car? It is the price set by the government and published periodically in the official state gazette BOE in a list sorted by make and model. This price is based on the characteristics of the vehicle and is the one that should be used as a reference for appraisals, compensation, expert reports, etc. The Ministry of Finance publishes the updated tables in the BOE, usually at the end of the year for the following year. Based on this official value, the insurance company applies a reduction percentage depending on the year of first registration. During the first year of age, the vehicle usually retains 100% of its insurance market value, while if it is 4 years old, it is reduced to 47% according to the BOE, or to 13% if it is between 11 and 12 years old. In other words, the older the vehicle, the lower its insurance market value. For this reason, insurers sometimes declare a vehicle a total loss when, in principle, it could still be driven. The reason is that the cost of repair exceeds its insurance market value. These percentages may vary slightly depending on the annual order of the BOE. Although it may seem a little complicated, this calculation is simple if you use the market value calculators that you can find on the internet. You just have to enter some information such as the license plate number, year of registration, make, model, equipment, and other extras, and the calculator will perform the final calculation. Scrap value. This is what your car is worth after an accident, depending on its condition. Parts that can be recovered, reusable scrap metal, etc. In short, the scrap value is the money you can get by selling the damaged vehicle to a scrapyard or an authorized vehicle treatment center. When a vehicle is declared a total loss, the insurance company will pay you compensation. This compensation is calculated by subtracting the salvage value from the market value of the vehicle. This gives you the option of selling the salvage to a third party who has made an offer for the damaged vehicle. For example, if your car has a market value of €4,000 and the scrapyard offers €700 for the wreckage, 4,000 minus 700 equal €3,300. The insurance company will ultimately pay you €3,300. Therefore, if the value of the wreckage is high, the compensation is lower. If the value of the wreckage is low, the compensation is higher. However, if you decide not to sell the parts to a third party, the insurance company can keep the wreckage and pay you the full market value. Types of car values. The three most common types of insurance market value are basic, improved, and second-hand value. Depending on the policy you have agreed upon with your insurer, they may apply one or another type of actual insurance market value depending on the coverage and policies it includes. Basic insurance market value. Basic insurance value of the car on the second-hand market. This is the lowest price the vehicle can reach due to wear and tear or the presence of significant damage. If a vehicle has been well maintained, its market value will be higher. Insurance market value improved. The price of this option includes an additional increase that improves the insurance market value in the event of an accident. Second-hand value. This is the price of the vehicle at that moment on the second-hand market. Supply and demand can influence the final value of the vehicle. This calculation also takes into account the mileage and general condition of the vehicle. It is usually used for sales between individuals. Replacement or substitution value. This corresponds to the cost of replacing a vehicle with similar characteristics to the one involved in the accident, which is why insurers usually take it into account. It includes registration, transfer management costs, and other expenses, which is why it is usually higher than the base market value. New value. This is the price the car had when it left the dealership new. It is usually higher than any of the other market values mentioned above. Implications for fleet management. The main consequence is that if we have a total loss, the compensation we receive is calculated using the insurance market value of the vehicle. The following measures are recommended. Type of insurance market value in the insurance policy. The policy must include the type of insurance market value that applies in the event of a total loss, basic, improved, or second-hand. Always check that this is included in the policy. Type of insurance market value according to the vehicle. In a fleet, trucks can be insured at basic insurance market value and vans at insurance market value improved. In the fleet, vehicles less than 4 years old can be insured at insurance market value improved, and those over 4 years old at basic insurance market value, policy price. Depending on the type of insurance market value, the price of the policy varies. The higher the compensation, the higher the price of the policy. Fleet value. For the insurance company, the sum of all the insurance market values of the vehicles in the fleet is the total value of the fleet, and this must be the reference value for calculating the fleet insurance premium. Insurance market value. There are vehicles that, for various reasons, are in high demand on the second-hand market and depreciate less than stipulated by the tax authorities. In these cases, the best option in the event of an accident is the second-hand value. These are highly specialized vehicles used in mining, public works, street cleaning, etc., or in countries where it is difficult to purchase the vehicle. Vehicle depreciation. The insurance market value for each year can be used as a reference to calculate the depreciation of the vehicle. This value is what the vehicle actually costs each year, not the accounting depreciation. This value should be used in calculating fleet costs, such as cost per kilometer or total cost of ownership (TCO).
Learned about our fleet management consulting and training services. Reduce costs and optimize fleet management activities. We electrify your fleet of vehicles. We carry out the electrification plan until its implementation, known as